It's 1983, in Dayton, Ohio. A 34-year-old woman named, let's call her Carol, walks into an insurance office. She's got a stable job at a manufacturing company, no health problems, doesn't smoke, doesn't drink, nothing on her record that would raise eyebrows. She fills out the application, hands it over, and waits. The agent looks at it for a moment. Then, without saying much, he slides it into a different folder. Not the approved pile. Not denied either. Just pending. Carol doesn't think much of it at the time. Maybe it's just paperwork. Maybe it's standard procedure. She has no idea that this one folder is about to send her on a journey, one that will expose how an entire industry secretly decided what a woman's life was actually worth. And the answer, as she's about to find out? Almost nothing. What Carol didn't know was that thousands of women across America were opening the exact same folder. A week goes by. No news. Then Carol gets a call. The agent needs additional documentation before they can move forward. A letter from her employer confirming her position is permanent, not temporary. Recent pay stubs. And, oddly, a question about her marital status, even though that had nothing to do with her job or her health. Carol gathers it all up and sends it in. A small inconvenience, she figures. Just bureaucracy. But then she mentions it, almost in passing, to a coworker. A guy in the same department, same job title, same salary, around the same age. He'd applied for a similar policy just a month earlier. He got approved in 3 business days. No extra letters. No questions about his marital status. Nothing. Same income. Same job. Same risk profile, on paper. Completely different process. Carol laughs it off at first, maybe it was just a busy week at the office. But the more she thinks about it, the less it makes sense. And that's when she starts asking the question that's about to blow this whole thing open: why? Here's the thing. There was no law in 1983 that said don't insure women properly. No sign on the door. No memo Carol could point to and say, see, right here. The villain in this story isn't a person standing across the desk from her. It's something most people never even know exists, a rulebook. Insurance companies call it underwriting guidelines. The internal formula that quietly decides who gets coverage, how much, and at what price, long before any human agent even looks at your file. And buried inside that formula, in the early 1980s, was an old assumption that had survived for decades without anyone seriously challenging it: a woman's paycheck wasn't real income in the same way a man's was. It was often referred to, informally, as pin money, extra cash for nice-to-haves, not something a family's finances actually depended on. So when Carol applied based on her own salary, the same salary, doing the same job, as her male coworker, the system didn't quite know what to do with her. It had been built around a different picture of the world. A picture where the man works, the woman stays home, and his income is the one that needs protecting. Carol wasn't being singled out by a vindictive agent. She was running headfirst into a machine that had simply never been redesigned for someone like her. Even though, by 1983, more than half of American women were in the workforce. But what happened next? That's when things got a lot more personal. Eventually, Carol's policy comes through. Approved. Relief, right? Except when she looks at the numbers, something feels off. The coverage amount is a fraction of what her male coworker had been offered. He'd been approved for a policy that could replace nearly a decade of his salary if something happened to him. Carol's policy? Enough to cover a funeral, and maybe a couple of months of bills. That's it. Here's why that gap mattered more than it might sound on paper. Carol and her husband had a mortgage, and Carol's paycheck covered a real, meaningful chunk of that monthly payment, not extra money, but money that was already accounted for in their budget. If something happened to her, that small policy wouldn't replace her income. It wouldn't cover the mortgage. Her husband would be left trying to make up the difference on a single income, and depending on how things went, there was a real chance they could lose the house their kids were growing up in. This wasn't an abstract paperwork issue. This was the difference between her family being financially protected if the worst happened or not. So Carol calls the company and asks why her coverage is so much lower than her co-workers, given that their salaries were nearly identical. The answer she gets stops her cold. She's told, in roughly these words, that insurers are cautious about offering married women too much coverage because if something happened to her, the payout would go to her husband, and that was something underwriters preferred to keep limited. Carol sits with that for a second. Her potential death being financially survivable for her family was being treated as some kind of red flag. She's not just underinsured. She's being treated like a liability in her own life insurance policy. And if you think that's the worst of it, wait. Because Carol, at least, had a paycheck to point to. Carol starts talking about all this with other women, friends, neighbors, women from her church group. She's curious now. Did anyone else run into this? One friend's story stops her in her tracks. This woman, a mother of 3, had spent the last 15 years as a full-time homemaker. No outside paycheck, but anyone looking at her daily life could see the value of what she did, managing the household budget, cooking every meal, handling childcare that would otherwise mean hiring a nanny, doing the work of a cleaner, a driver, an organizer, a tutor, all of it, every day, for 15 years. When she tried to get her own life insurance policy, she was offered almost nothing. A small add-on called a homemaker rider, a few $1,000s. Maybe enough to cover a funeral and a few weeks of temporary childcare. That's the entire economic value the system assigned to 15 years of full-time labor. Carol does the math in her head. 15 years of work, valued at less than what her co-worker's policy would pay out in a single year. If that homemaker disappeared tomorrow, the family would suddenly need childcare, transportation, meal preparation, scheduling, and household management. Services that could cost tens of thousands of dollars a year to replace. The message underneath all of it was impossible to miss. If you don't bring home a paycheck, your life, at least in the eyes of this system, doesn't really count. Carol starts to realize this isn't just about her pending folder anymore. This is everywhere. It's baked into how the entire system sees women, working or not. So Carol does the obvious thing. She writes a formal letter to the insurance company, appealing the coverage decision. She lays it all out clearly and calmly, same job title, same employer, same salary as her male coworker, comparable health and lifestyle, but a fraction of the coverage amount, with no real explanation beyond company policy. She sends it off and waits. A few weeks pass. Eventually, a reply arrives. Short, polite, and completely unhelpful. The appeal had been reviewed. The original decision stands. The coverage amount, the letter says, was calculated according to the standard underwriting procedures. No further explanation. No acknowledgement of the comparison she'd drawn with her coworker. Just a closed door, dressed up in formal language. And that's it. That's where this story could have ended. One woman, one denied appeal, one quiet no. Exactly the kind of outcome that systems like this are built around. Most people, faced with a wall like that, simply give up. Life moves on. The folder gets filed away. Carol nearly does give up. For a while, she does. A few months later, almost by accident, Carol comes across a newspaper article. Consumer advocacy groups, organizations that had spent years quietly collecting complaints from women across the country, were starting to go public with what they'd found. Through journalists and early legal advocacy work, internal underwriting guidelines from multiple insurance companies had started surfacing. And in more than one of them, the same idea kept appearing, a working wife's income described as supplemental, not essential, regardless of how much she actually earned, regardless of how much her family actually depended on it. Carol reads that sentence and feels something click into place. Standard underwriting procedures. That phrase from her appeal letter wasn't some unique judgment about her specific file. It was a line pulled, almost word for word, from a much bigger rulebook, one that had apparently been applied to women across the country for years, in different states, at different companies, to different women who'd probably gotten the exact same polite no that she had. Her denied appeal wasn't the end of her story. It was one small piece of something much bigger. So Carol sits down and writes one more letter. This time, not to the insurance company, to her state's insurance regulator. By this point, Carol isn't expecting much. After the appeal, she's bracing for another polite, useless reply. But her letter doesn't disappear into a void. Instead, it becomes one of many. Throughout the late 1970s and into the 1980s, regulators in multiple states had been quietly accumulating complaints that all rhymed with Carol's. Working women offered far less coverage than male colleagues in identical roles, pregnant women turned away from coverage entirely or charged more because pregnancy was treated as a temporary risk, widows discovering that their late husband's policies had paid out far more than anything they themselves had ever been offered. One complaint, on its own, is just one complaint. But Carol's letter, added to a growing stack of others that regulators could no longer file away and forget, becomes part of a pattern, and patterns are much harder to ignore. State insurance commissioners start pulling underwriting files for review. Lawsuits get filed. Companies that had quietly operated on these assumptions for decades suddenly find themselves having to explain, in public, sometimes in front of a judge, why their guidelines looked the way they did. And here's the twist that makes the whole thing even more frustrating: the data was never even on the industry side to begin with. Women, statistically, tend to live longer than men. If anything, that should have made them cheaper to insure, not harder to insure properly. The bias wasn't backed by actual risk calculations. It was backed by assumptions that had simply never been revisited, until complaints like Carol's forced someone to revisit them. None of this happened quickly. It took years, complaints accumulating, advocacy groups applying public pressure, regulators investigating one company's files at a time. But by the late 1980s and into the 1990s, several states began restricting how much gender could factor into life insurance underwriting and pricing. Slowly, the explicit pin money language started disappearing from official guidelines altogether. Carol's story, as told here, is a composite. Built from the kinds of experiences that consumer complaints, lawsuit records, and regulatory filings from this era describe over and over again. Whether it was a factory worker in Ohio, a lawyer in California, or a widow in New York, the pattern repeats: a system quietly built around the assumption that a woman's income and a woman's labor simply didn't count the way a man's did. None of these women, on their own, changed the industry. Carol's appeal got denied. Her complaint was just one more piece of paper added to a regulator's growing stack. By itself, it changed nothing. But thousands of just one more pieces of paper, sent in by women across the country over the course of years, eventually became impossible to ignore. The industry didn't change because it suddenly developed a conscience. It changed because women kept asking the same question, again and again, in letters, in appeals, in complaints filed to regulators. Until enough of those questions piled up that someone in power finally had to answer. Why am I being treated differently? If stories like this, the hidden financial history nobody teaches you, interest you, subscribe. Because this is just one folder. There are thousands more.